following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Well, good morning. Welcome back to NinjaTrader Live. And I'll be your host, Tom Schneider, for this segment, CMT with NinjaTrader. And usually we do on Thursday mornings. This time we have Develop Your Edge. This week is no different. Bringing in Anthony Crudele. Anthony, how you doing?
Doing great, Tom. Hope everybody's doing well today.
Yeah, everybody's good here at NinjaTrader. And looking forward to this segment because the segment today is what's next for gold. And I think that's a question that a lot of people have after this huge rally that we've seen in the last couple months.
It's crazy how busy it is even right now as we speak. I was looking to see if there were some headlines coming out. I mean, I knew this morning we had some data that hit the tape that moved gold a little bit late after the data. But yeah, I mean, gold right now, I think we just actually go right to the charts today, Tom, because there's really not, we're not macro guys. You and I were on the more on the technical side. I actually was just at a whole podcast with Peter Schiff on gold the other day. You could take a guess which direction he thought it was going.
I saw that. That's great.
No, but it was a good discussion, and I think maybe we touch base a quick bit on the macro. When we would look at gold right now, we're seeing really two big macro conversations behind it. Is it being driven by geopolitics, or is it a hedge against central banks, inflation, weakness in the currencies that people are going into gold? And really, I think it's both. I know that Peter, he is obviously more of a gold expert than I ever will be, but I think that, when you look at what's happening geopolitically as well, you can't deny that the traders are in a rush to buy it. And I know that's what's creating a lot of really a tale of two tapes a lot of times, I think, in gold. And I think that's what's making it so difficult, is because difficult, also opportunistic. And when I say by difficult, I mean that it's really whippy. I mean, look at today. I mean, you had this big move lower and then a big move higher, and it just happened quickly. I mean, you got to make sure you have stops. I actually was short, and I'll show you exactly what I did here in just a moment. But when you look at it, you're going to see a lot of crosswinds with gold, because you're going to see trades unwind that are out of play when they come out of play, right? So you're going to see bids come in when there's geopolitical concerns, and then when the geopolitical concerns diminish, or taper a little bit, next thing you know, you're going to see flows out of gold, and then you're going to see some news when it comes to inflation, and you'll see gold move. And then when it sounds like it's not inflationary, you'll see gold come back down. And so the one thing about trading gold, I will tell you this, and silver, I would say for this, it really is important to understand that these moves in these markets, a lot of times they're feast and famine. And I've seen it a lot. It's a tape that where it doesn't move like the NASDAQ and the S&P. It is its own personality. And I think it's so important to understand that from a technical perspective, because when you come in and trade gold, you have to know that, like, I'll look at the same daily ranges and all of a sudden I'll have these one-off big ranges. It's not like the S&P where it's pretty consistent. It'll just have a really big range, and then it'll have a really small range, and then it'll have a big range, and then it'll have a one-directional range. And so it's different in that nature. And so anytime I'm looking at anything strategically, I really try to just focus on one side and not get caught up too much trying to overtrade this tape, because this is a market that you can easily overtrade it on a day it's busy, or it doesn't give you what you want, and it kind of lures you into that. And so what I start with, as I do with every market, Tom, as you know, I start with the daily Bollinger Bands, 20 period, 3 standard deviation, and I look at my risk zone. Like, where are we within gold? And gold had this big move higher, And I talked about this even before when it was even the chart looked very similar to Bitcoin. And I said, even with gold, if you remember time we had this conversation on the show, I said, when will gold be a short? When the top Bollinger Band peaks and it starts to come back in, the following sessions, you could see gold start to rotate over. And lo and behold, that's what you had. Not saying that I call the top or any top in any market, but the point of the matter is I know when I can be short, I know when I can be long, or I know when I can trade both sides. Gold is a market right now, actually, that I look at, and I'm more inclined to want to sell the rallies than I end up to buy the dips, because you have a 5-day moving average consistently kind of grinding lower, staying below it. When we were staying above it, we were staying above it for a period of time. Now we're consistently staying below. We're actually right up near it right now. And the big risk zone is 23.93.94 area to 22.92. And to me, I think eventually at some point they're going to try and get this 22.92 unless we have a daily close above 23.94. So I'm coming into the gold market. It's boxed out. I know what I'm looking at. And then we have to go to the shorter term markets to see what it shows us. But for the most part, that's kind of like my overall mindset before I get in and come into trade gold and know that I have crosswinds, and then I get a technical perspective on it.
So to kind of paraphrase for today coming in, let's say you're looking slightly bearish because of the trending, the moving average is trending down. You're in a risk area. You're kind of halfway between the 30 and 50% level. You've got constricting bands, so it's not range expansion. It's almost a consolidation or kind of retracement area. And so what I would think you're looking for, sell the rally, not buy the dip. Is that
exactly?
Kind of
and also because the primary trend has been up, you don't sell weakness, you sell strength.
Right.
And that's the key here. And because the primary trend is up, it's almost more of where I would say a two-way tape. It leans to the bearish side because we've rotated over below the 5-day and because the Bollinger Bands are coming back in. So it is what I would consider mean reversion, range contraction. And so the rallies I expect to be fierce up, but then come off. I don't expect them to sustain rallies. And that's the key. But the underlying always is, what is the bigger picture environment that supersedes even this daily chart, is the overall trend is up. So then we have to come and we have to look at our tools to say, what can help us execute this market? And so I was actually just short. I was short from 36 and 39.50. And I put a stop in at 44. I'm using micro golds here. And, it was interesting this morning. We're actually getting look at this move right now. It's crazy. So this morning we had opening range high, trend day down. Why is that? Because we had the first 3-minute bar is a 3-minute chart. I looked at it and said, look, at opening range was the high, market got down below the 3-minute low, opening range low, and then the VWAP came down significantly, and all of the order flow was to the sell side. I sold the first rally, rotated out of it, sold it again at 2 standard deviation or 1 standard deviation and 2 standard deviation below opening range. And then I put a stop in at 44, just above the high, and it stopped me out. Once again, this is why you use stops. I mean, look at that, right? And so fortunately, I was able to get a little bit of rotation out of one of them when we first got. So what I'm looking at when I say to sell strength is you're looking to sell rotations up to 1 standard deviation or 2, and then rotations back to VWAP, right? Leave trailers for the market to come back down. But, I had a little bit of success selling into 2 different rotations here, okay? And the key right now is where this day could potentially change. First off, I want to say this. Anytime that a market does a move like this, the mindset is, especially for day traders, even though I'm coming in today knowing that I want to be a seller, why would I want to step in front of this right now? And you look at this and you're just like, there's either something happening in the news I can't see right now.
I'll tell you, Anthony, what that news is. There's a couple things that came in. Secretary Janet Yellen said they're prepared to use sanctions on Chinese banks. I don't think that moves that too much. Really, I think the Israeli airstrikes are happening finally. We've known that they were going to retaliate, and it looks like it's starting before their ground attacks. So this is really about geopolitical.
Well, in a sense, it's really both, right? If you really look at it. So this goes back to what are the drivers behind a market like this, right? And so if you're talking about seizing Chinese banks, who's the biggest buyers of gold lately has been Chinese, right? And so then when you look at that, you say to yourself, okay, there's an underlying bid there and they're a big buyer, right? And if there's going to be any sort of concern, you move from currency into gold, right? So there's that. Then you have geopolitical concerns when markets getting clipped and you come in, you have an underlying bid. So right out of the gates, it doesn't matter what my technical plan is, right? This is also why you always work stops, and it doesn't matter how great your plan is. It always comes down to execution, because this is why also I'm not selling weakness. I mean, there's a lot of things that are coming into play here right now in real time. One is you cannot sell any sort of weakness in this, and now you have to really have a strong confirmation that this is potentially changed from the macro backdrop for you to even want to look short. And this is so important as a trader, because initially you're going to have this fixed in your mind. Look, I only want to be selling rallies, which I said that's what I'm looking at. But now I have to decide, is this day just over for me? Because technically I still kind of want to be short. But the macro backdrop has changed today. This is one of the biggest things when you're trading like gold, silver, or any commodities. These markets will change on a dime based on a headline. It's a lot different than what the S&P, like the S&P today might look at all of this and it could rally all the way back. I mean, there's no doubt about it, right? I mean, who knows what could happen at the close today with Google and Microsoft. I mean, there's so many different things, but with gold is very different. And so now we have to understand the market environment. Where most traders get in trouble is when they try to fade what is really happening, not embrace that either their homework didn't work or the environment's changed. And this is rule number one. Never fade what is a bigger driver than what you thought was the driver, right? And so technically we thought could be a weak day, and it probably was going to be, take that news out of consideration, and no, lo and behold, we have what we have. Now, I guess at this point, because I was actually going to try and do some rotations, now I just know I'm just not even going to trade this. But I guess we look at it and go, what do we look at here? I want to bring into the equation here, Tom. This is something we don't look at a lot here on NinjaTrader, and I think this is actually a very cool chart. It's called a volumetric chart. And here we are in gold, and this is something that I'll look at and I'll say, okay, where are there, you'll see a lot of order flow guys talk about imbalances, right? What is the tape doing? What's inside the candle? So you have a candle here, it's a 30-minute, and then you have, my VWAP, I have that for regular trading hours. And then you have, this is what's inside the candle, everybody. Okay, so it's a volumetric bar. It's going to show you volume, the delta, cumulative delta. The most volume traded is going to be this. I actually can make this wider, but it's going to probably shrink the chart a little bit. So let's see if I could even go one more to try and get that. I think that's pretty good. Yeah. This bar right here with this turquoise bar is the highest volume bar. So it's the high volume bar. All right. And then you're going to have these pink and blues are going to show what's bought and sold on the bid and offer. So it's going to show you the delta. And so what's interesting here is that you'll see on the way up, there was actually a good amount of buyers and sellers on both sides. It wasn't just like this binary buy mode where it was just like bid, 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 bid. Obviously, the bids were pretty strong here, but you look at, there was a huge seller right here at 45.5, which was the high. Maybe they didn't catch the news, Tom.
Right.
That dude got squeezed, right? And so ultimately, now I look at that area, I look at this high volume node, and I look at this big short area, is that if the market were to pull back into here, this would be support for me, because this is where there's going to be most likely buyers stepping in, because there's a huge amount of shorting in here. And when you look at it, it's funny, like I said, I was short, I sold it right in here on this node. Which I told you I short from 30, I sold 36.20s, and then I sold 39.40s to be exact. And so that was what the standard deviations were. And you could see there were some sellers there and then ripped up. And then you could see once we got back into opening range towards the high, big sellers stepped in. Now, if you don't know the news, you might have sold it with them. And then next thing you know, we had the squeeze. So this area to me is of key importance that we probably won't see tested in this bar. But when you look to later in the day, here's what I would look for. Now, because I do think that the tape potentially could be a two-way tape, we looked at the daily and I said, look, at the big picture is still bullish. If this VWAP were to get above the opening range high, it almost could turn into a trend up day.
Right.
And at that point, that would be right into this area where I would start to use VWAP or standard deviations potentially to get long. I'm personally probably not going to do that. I don't like trading news days, but that's something you would look for on a macro news driven type day where all of a sudden the tape has changed. The market is going back to potentially bull mode. And we go back to my daily where the top of that range could be 23.94, not impossible to get up there.
Yeah. Yeah. No, you bring up an interesting point about news too. It doesn't trade like gold doesn't trade like the stock index futures. And this news isn't like regular known news, where you get a print, you get an unemployment number, or you get a CPI number. This is kind of like a switch, right? So you mentioned like, okay, we've got a news report that comes out that changes the dynamic, but when does it change to where it was before, right? And in geopolitical, we don't know when that happens, right? If it's a start of an escalation of conflict, when does the market think that it's over? And not the conflict itself, but the risk that comes from that escalation, right? It's not a binary thing in terms of, okay, the market reacts and then we can go back to normal trading. It's kind of like changes the whole attitude, like you mentioned.
Oh, it's such a great point, Tom, because in other words, what happens with news like this that drives something like gold is it's not like a data point that we look back at and we see further repercussions down the road and how the Fed may change policy. This is something that is imminent now, and we don't know how much flow comes in for people to either take on risk or they're looking at it as managing risk against something else. And so the flows can be very tricky. It's not like the flows may come in too much beyond this because it might just be the initial flows that come into the market that jarred the tape, and then ultimately the tape goes back to trading, the way it was earlier this morning. This is why I go back to anytime you're trading gold or silver, or even copper, when you get macro backdrops in these markets, man, you really, really have to be careful to think that your technical strategy matters that much, because these are the types of markets that when they're trading technically sound and there isn't a lot of news, they're great markets. But when they're starting to get pushed and pulled quickly because of headlines like that, you have to be super patient, because you have to get to the point where the technicals are starting to look clean again on your chart, where you're starting to see responses at your areas either hold or fail to hold to give you an idea of what's really working. And if all of a sudden your technicals start to work clean again for a period of time, then you can go back. Right. It's very different than trading the indexes, in my opinion. I mean, you could have the same identical strategy, but my approach is going to be a little bit different because of all the things that we discussed.
Right, right. And that makes sense, right? Because this seemed to me a little bit above the market, if you will. It's like a broader market than even stock index futures, because everybody's invested in gold, right? Everybody in the world, every country, every, big company, big companies most likely have gold exposure of some sort, whether they're using it in manufacturing or just holding it in, some form in their balance sheet. But it's bigger than just, let's say, like a niche market. And I say the S&P is really broad too, but it still is a little niche, right? Because you can be risk on, risk off, but gold is held by so many different entities that it just seems like a broader thing. And you're right, technicals work up to a point, and sometimes you just have to stand back and say, market's not responding because of my chart or what I see. It's responding to something bigger than me, and it's time to reevaluate not your strategy, but what you're doing right now.
Execution.
Yes.
There's a big difference between having a strategy and being a trader. I mean, this is 101. If you want to get to the next level and consistently develop your edge, you have to understand market environments shift and change, especially these days, on a dime, quickly. And so if you're not willing to understand that and accept that, then you're always going to struggle, right? And so there's a reason why a lot of people flock to the E-mini S&P, even the E-mini NASDAQ, because there's a consistency in which how it reacts to things, and there's a consistency in how the tape can absorb news and move on.
Right.
It's different when you start getting into these other markets, okay? And if you really want to be someone who's involved in trading gold, silver, or any of these other markets, you know, there's a reason why the E-minis are doing millions of contracts a day versus the gold market that's not, right? And it's not because this market is not, it's not meant to be like an S&P or a 10-year, right? And so, which I think in a lot of ways, there's a lot of edge potential there because you're not fighting as many bodies. Right. And so also when a market catches a trend like it does in gold, it can be very profitable. But it's also why you have to really be careful with your stops and make sure you work them because it could run just as easily the other way. Right. And so I always look at it as with anything I'm doing, you know, and I trade gold and oil. I don't trade it obviously as much as the indexes, but I trade them every year throughout the year. And there are certain times it does very well, but I'm also quick to stay away from it when it's not. And you have to have that mindset. And you also have to have the mindset that when it's working well, you can be quick to grab onto it and do it. But it all comes down to preparation. Is the macro really having too much of an impact? Like you can go back in time and gold was really a two-way tape for like years. Right now it's breaking out. And what do you expect? It's a precious metal that's breaking out with all these implications. And so therefore, understand macro trends, understand, you don't need to be a macro expert, and understand the technical trends. And when you come in, sit back and be really patient. One thing I want to show here is why I put the micros up. This is why I like these moves like this. So let's watch this area, 45, 46. I'm going to show you something I'm going to look at here. I'm going to buy one, and this is something I'm showing in terms of how I would trade off of this area. 44.20 is the next area I would buy, and I would put a really tight stop, and I would put it right below this nodule of 42. So I'm going to put, this is, put a 2-lot stop there. Now, the reason why I'm buying into this area, and I'm doing this purely for example's sake, which I don't do often, but I like to do it because I want to show technique and how I would retest an area where I know there's a big short position potentially built up, and you can see it here. The sellers are coming back in. If this tape is going to turn, I think this is the range it turns in. It turns in this range because this is the area of where the shorts were, right? And so I know between 44 and 46, I can buy small and have a relatively tight stop, right? I know if it starts to push below here, this thing can run all the way back down to 40 and maybe it goes back to the VWAP. But if it's going to hold, okay, and I'm showing this purely for technique, not necessarily just because of gold right now. And I'm doing that because I want to show an example of like a day that I want to be long. And that's why I like having the micros up because it's much better than simulation. You got real money, you could see it. And I like this, to me, is this squeeze area where if I think it's going to continue to push back up, this is the area I would like. And just purely technique there. And I'm actually going to go to this real quick because I want to look. Yeah, look, top of opening range too.
Right. That squeeze concept, is about that big short position, right? That big short position has to go long, right? If they start feeling the pain, and you want to be long with that, right? Because they have to get out of their short position.
Think about this. Anytime the biggest players, the biggest traders in any space, if you can see where their prints are and you know that there's a huge amount sold there, come back down there. If they're not buyers there, or if there's not someone protecting that area or trying to, you know, squeeze out of their position, you know, you know a lot. That if it were to blow through it, then I'd be like, man, the sellers were right for selling. This thing's going to rip lower. But I can risk a couple of points, and my total risk on a position is probably going to be right around $100 to potentially make that times 2. If I was to be able to get more, all of them on, you know, maybe 2-to-1 risk reward here. And I could lean on that area. I like those. This is why I like the volumetric chart, because it shows me within that candle, this is where the shorts are trapped, right? And so when I see that, I look at this and go, that's the high volume area. If this area is going to get protected, I could be long really small in here for a potential to run right back up. And so, like I said, this is more of an example I want to show than it is like I'm thinking gold is going to rip higher here. But I know that I'm willing to throw on a small amount of risk if I am someone who would believe that this tape is going up. This is the way I would approach it. Wait for it to come back into the squeeze, stop just outside it, Because once again, who knows? This thing could rip all the way back down, it can rip all the way back up. I mean, honestly, I'm looking at this tape going right now, small and smart. Get in some tight stops. Maybe I get a ripper or a runner. That's it.
And so Anthony, just for perspective's sake, when you see that big volumetric candle, right? Somebody had resting orders there, most likely to go short. The news came in, they weren't prepared, they didn't move, cancel those orders, they got filled. But that is a really big candle, right? It really jumps out at you. How often does that happen in gold? That you see that, or any market really, where you're like, man, that's a big position that somebody took. Let's see if we can, there might be a squeeze opportunity there.
I mean, almost every day.
Yeah.
I mean, I see it quite often. And this is like, I love seeing on, actually, next week, we're going to talk about good highs and good lows. Like,
Cool,
I
yeah.
love looking for areas where you see bars like this near the highs or the lows. Like a good high today would be if the volumetric bar would be really strong to the buy side and the next bar tries to retest it and comes off of it. That's a good high.
Okay.
Because in that moment, the market tried to push higher with volume. Let's see if I can find some like this right here. So you see up here, the buyers came in, highest volume bar traded on the high of a bar, bang,
Yep.
market came
Yep.
right off of it.
Right.
That's a good high.
Yeah.
Right. And so you look in here, you look to see, look at sellers came in. Here's where sellers came in strong and then took out a low, right? Buyers tried to defend the low and it went lower.
Right.
And so volumetric within these candles, it really could go. It's good to see where the market basically is absorbing a lot of volume in one direction, and the market's just taking it in, and then it goes the opposite way. Now, mind you, if it were to take it and go up, or I mean, it would go with it, right? If you were to go with the market. So, for example, here, let's just say that all of a sudden we got back down below here. This thing could come all the way back down, man, because maybe now the sellers are in such control that they took all that buying that would potentially be a good high. I mean, you've got news driven here. I mean, this I was showing is purely as an example as to how I look at it, but I like to buy back into sell areas or sell into strength areas if I think that they can be defended. And today with the VWAP coming up and with everything coming up, it's just a quick example to show people how to do it.
That's great. I love those volumetric charts. We don't use them enough. It is part of the order flow package. So if you're looking for them and you don't see them, you might contact your NinjaTrader rep to see how you can get that order flow package. It's part of that same set of studies that come with, let's say, volume profile and VWAP and the cumulative volume study. But yeah, no, those are great. We should show that more.
Yeah, it stopped me out. But you see, look at the sellers come in on a new bar. They went right through it. So the sellers resurfaced again. See that?
And a big, right.
Step, and then they just rotated it right down. Look at the delta.
Yeah.
Tricky tape. But, you look at it and go, that's why, to me, small and smart. Pick my little zone area, work my stop, Yeah, I didn't think I lost. I think I like, this is why I like the micros too, which I should talk about. They're only $1 a tick.
Right.
It's a great place to test yourself in gold, test your strategies in gold. Otherwise you're going to be using the big product, which can be $10 a tick. So instead of me losing, I think $80 there, you lose 800.
Yeah. For an example.
Just a little difference.
Right. Oh, we appreciate that. What else do we have going on? Do you have any CME information you want to relay?
Just check out the micro gold. It's $1 a tick. It's a great product. I'm seeing more and more day traders flock into this product, which I think is awesome because, like we said, gold is moving. And some people that have strategies built and they want to test them and they're coming from the indexes, I think using micro gold is a great way to start in gold. And obviously you can move into the gold futures from there. But and that's it.
Awesome. Great. Anthony, thanks so much. It's always entertaining and invaluable information, more importantly. Where can people find you if they want to, look for you?
AnthonyCrudele.com or at Anthony Crudele on X.
And look for that podcast with Peter Schiff. It's really good.
Yeah. Oh, thank you, Tom.
Yeah, it was good. I reposted on X and yeah, it's you're getting some great guests, Anthony. I love it.
Thanks, buddy.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.